Good evening, everyone. Time for this week's silver update. Wanted to start off with a gold chart this time because been looking at gold and it's not nearly as volatile as silver has been, and just wanted to point out that when we look at the gold market, we really seem to be following along in a strong bull uptrend. Drawn a number of lines here. I've done a double trend line because just because of the points of support, and just to point out the general trend. And then I've done some cross points at each point of the MACD lows, major lows in the MACD. As you can see, we had one back in August. And then we also had one back in February of last year. Another one was back around May of 2009, which also coincided with the stock market bottom. And then we had the major low back in the fall of 2008. I've drawn a line straight up from the very bottom point of the MACD bottom. We've got one here, one here, one here, one here. As you can see right now, we're at another one. So you can see gold has worked off a tremendously overbought condition that occurred back in October, and we're all the way down back to a oversold point now with the MACD crossover. That took about 3 months to work off, and it corresponds to a high of about roughly 1380, nearly 1400, and we're back now to 1350. So quite a decline in the MACD, not that much of a decline in the price. And you can see we did the same thing, the same sort of thing here. We declined a couple months, took maybe $100 off the price, $150. Up here we went from 1220 down to 1,000, so about 200 off the price. This one not nearly as much. So you can see we're following pretty much the same pattern. It's actually pretty boring. I don't see anything to indicate that this long-term pattern is going to be broken. This pattern has held up since the low of 2008. It's been very consistent, and that's why I wanted to point that out, because silver does tend to follow gold. And although it is more volatile, and although its trend lines are not as sharp and are not as consistent, I just wanted to show you that in gold, everything is shaping up for another bull run over the next, I would say, 3 to 4 months. That's the length of this one. There's one there. They're all about the same length. So based on this trend line, in the next 3 to 4 months, if it holds and we stay at the same rate of increase, we should be looking at, I would say, roughly 1,600 by the time this one is over. 1,550 to 1,600 in the next 2 to 3 months. So we'll see. I want to overlay the silver with that because that was the reason I pulled that up, is that the silver is not as it's not as smooth. So people tend to get scared out of silver because it just is more violent. So you can see the breakdown here that occurred in silver was not accompanied with gold. Now we're matching back up, but silver has not followed the same sort of trend line. Gold was stronger through this period, and then silver caught up. Normally when silver catches up, it actually overshoots. You can't really see it on this chart. If we take it out farther to the weekly, you can see it. Although it didn't overshoot too bad, a little bit there, a little bit there. some in here. So not a real strong overshoot. We're back to where we're caught up. And we're still working off an overbought MACD, even on the weekly. So that's pretty healthy. The gold trend seems to indicate that much higher prices for both silver and gold. We'll just have to see how that works out. I wanted to point out a little thread here that I got involved with. It's on the Kitco board, the Kitco Silver board, and it's kind of controversial. I kind of feel bad because I called this guy a shill and a troll, but this Stackham High came in and said that there is no silver shortage. And he presents a couple of arguments here. He mentions the fact that the dealers were out of 100-ounce bars. And I'm not a troll or a silver hater, but there is no such thing as a silver shortage, nor can there be without government price control or confiscation. The physical market is completely efficient and driven by supply and demand. If the demand rises and supply does not increase, then the price will increase until the demand is lowered to the point of equilibrium. If everyone in the U.S. decided that they wanted to own silver, there would still not be a shortage. Those who could afford the prices would be able to find sellers willing to sell. Those who could not afford the prices would have no silver. Just because they could not afford it does not mean there is a shortage. Okay, so I disagreed with him and pointed out a couple of reasons why. The definition of a shortage is not, that there's some available here and some available there. A shortage is when you got to wait for it. We know with APMEX there's a wait. Now the question, this all begs the question, why? Why is there a wait? Why isn't it available right now? And the theory of supply and demand will tell you that the reason why it's not available and the reason why there would be a wait is because something is interfering with price. Now, I wanted to give an analogy, and I did give an analogy, arguing, I didn't come over very well. But if you think of a supermarket as an analogy, one of the things he argues is, well, there's plenty of rounds, plenty of this, plenty of that. Okay, well, think of a supermarket as an analogy. Say one day you go into the supermarket and you find that there's no ground beef. And they say, well, it's going to come in at such and such a time, and it seems to persist. And then maybe later you come in and you find there's no another type of meat, maybe turkey or something. And then you see something else they run out of. And but is there a shortage of food? Well, no, the store is filled with food. But certain types of food aren't available, and the question is why. Now, if you think about that type of analogy, you can think of the reasons why there might be. Well, maybe the price of beef has really exploded, but for some reason the producers were unable to get the prices that they needed to ask to produce it. So you can think of a lot of reasons why that might occur. One of the main things you want to notice is you don't ever see it. I think the reason you don't ever see it is because there's a true market. Prices are allowed to rise as high as they need to pull in the supply. But that's not what we're seeing in silver. Ever since the Bear Stearns takedown in 2008, we have seen varying shortages. Some have been very pronounced. Back in here, between this period and this period, there was a point in time when there was virtually no silver available. And people say, well, they were holding it back or this and that, and a lot of things. And we've had rolling shortages of different things all the way through here. Now, there's not an absolute shortage. There's not no silver available. But that doesn't mean there isn't a shortage, and that doesn't mean that there is not some type of interference going on with price. Because you have to remember, if prices are allowed to freely trade high enough, you'll never see shortages. So it's not as simple an argument as he'd like to make. They're interfering with the price of silver in various ways. We've had lots of reports of these. People trying to take delivery of 1,000-ounce bars in the mini contracts. I've received a phone call. Why do you want to do that? making it very difficult for people to take delivery. Other people, Harvey Organ and others, reporting that, well, cash premium to settle in cash. All those things which go into preventing the supply from coming through that should, but not letting the price rise high enough to pull it through. Those are shortage phenomena. And those shortage phenomena are caused by an artificial interference in price. You have to remember, this is a law of economics. It's an iron law of economics. If there is a shortage, if there is a waiting period, if you can't get it for at any point in time, then you know that something is interfering with price. It may be government regulation, it may be manipulation, it may be a cornering of the market, but the free market is not operating properly when you see back orders, delivery delays, shortages, we've run out, this and that. And of course we know it's because these people are trying to keep the physical tied to this fake price. And we know this fake price is too low. Now obviously if they let this price go to $150, I don't think we would see any kind of shortage of 100-ounce bars or anything else for quite some time. Now eventually I think we would again, because I don't even think $150 is high enough. But the point is that there are shortages, we are seeing them, and therefore we know that someone is interfering with price. So these articles sometimes get me worked up. Go ahead and visit the thread. I'll go ahead and link it. I just think it's a disingenuous argument. A shortage is defined as the inability to get supply and having to wait or be on back order. We're definitely seeing that in silver. There definitely are small shortages popping up here and there, and that definitely means someone is interfering with price. So the only way to fight them is to just keep stacking, and we'll talk to you next time.